What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very volatile sell-off and the market is starting to price in the very first rate hike. Will this be the end of the bull run and we're going through a full-blown correction right now? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did have a very volatile sell-off and we were down 1.92%. So the stock market is starting the year out with plenty of curveballs, and if you're one of those people that did not plan for a potential sell-off, the market just punched you straight in the face and now you're questioning some decisions. So remember the very first video I made for the year 2022, I told you to make a trading plan and make sure you were ready for a completely different market condition because this year we will have to deal with the Fed raising rates, and we finally get the first announcement today that the Fed is considering raising rates in March. So of course the market is being efficient and starting to price it in now, and that is why you see such a volatile sell-off. So nobody knows exactly how far the market wants to price this in, so you really need to make sure you have a very strict plan and you're ready to navigate some volatility. Now the good news is we still do have the bull trend and we're coming out of a nice bull flag formation even though it did break to the downside. So we're more than likely not going to just see the elevator down right away. I know a lot of bears like to use the word rug pull and you're just going to wake up overnight and you're going to be an account balance of $0, but it just does not work like that. So stay objective and follow price action and trend and make sure you're selling at resistance levels and not just panic selling at support. If you start the year off panic selling, that means you have no idea what your trading plan is and you're just panic selling because it feels good at the time, and you're going to severely regret it if the stock market does a V-shaped recovery and goes right back to where it came from. So make your plan now and make sure you're sticking with it. And right now on SPY, you do need to recognize that we did slice through two critical support levels today. We had critical support at 472, and then the next critical support was at 470, and we did close below both of those levels. So the next critical support levels will be this full gap close here right around 467.5, and then below that you're looking for the 50 EMA at 464. As long as we have the bull trend, which we still do have the bull trend, it's still possible we bounce off of any of these support levels, get right back above that 5 EMA, hold on to the bull trend and continue to trend higher. So never rule out the possibility in a strong bull market that you can bounce off support and continue to trend higher. A lot of bears and a lot of rookies made a lot of mistakes last year because they just assumed the market was about to crash and they just assumed the market was going through a 10 to 15% correction. And obviously the rest is history. We never actually saw a full correction and those bears were left behind in the dust and absolutely desiring more from this market. If you don't follow what the market is telling you, you're just guessing, and you might as well just go to a gambling casino if you're just going to guess because there's no place for guessing in the stock market. You need to have a strict plan and you need to know your risk and reward, and you need to trade in the direction of the trend. If you're counter trading the trend, you better be the best trader in the world because you're just going to get lucky. It's going to give you some false confidence that you know what you're doing, and eventually you are going to get wiped out. That's just the cold hard truth of trading, and if you're getting lucky, eventually it's going to build bad habits. And right now, you just got lucky if you shorted this market based on this rate hike news. And I'm not trying to take away from any profits you might have made. I'm just trying to help you understand that this is not typically going to be the trading strategy that's going to allow you to remain profitable. So understand that we are in a bull market first and foremost, and that we still have two more critical support levels that we could still bounce off and continue to go back into this bull trend. Now to the upside, we need to see the bulls starting to bounce off support and breaking back out above 472.5 and definitely getting back over that 5 EMA before we lose the bull trend. The bears will start to take over if SPY starts breaking down below about 464 and 462, and then we'll only have one more line of defense at the critical support level right around 455, and that level could still hold up, but it'll be a lot choppier market and it'll start getting a lot more volatile, and it's going to be very emotional and it's going to trick the majority. So this is definitely going to be a little bit of spurt of volatility to start out the year, and hopefully you were prepared for this, and hopefully you were heeding my caution warnings that I made in my first video of the year telling you to prepare for a correction and not to get too greedy at all-time highs starting out the year. So look for those critical support levels because those are going to be everything you need to pay attention to, and don't forget about the weekly chart, which we will still look at. You are still in a macro level bull market and price action is still above all of the positively sloping 20 simple moving averages, and we still have all the moving averages stacked to the bull side. So understand you're in a macro level bull market because that was the key to being successful last year, and it could very likely be the key to being successful this year. Don't just assume the market's going to roll over and die. Make sure you have a plan that prepares for it, but make sure you're still staying objective. This is still a bull market. There's no way you can look at this chart and say that it is not a bull market unless you're strictly being subjective, and we stay objective right here on this channel. Jumping over to the NASDAQ 100 triple Qs, you could definitely see there was some trouble in paradise in the tech sector. The NASDAQ 100 got absolutely routed today and the triple Qs dropped over 3%, again slicing through two of our critical support levels. We had critical support at 394, which we sliced right through, and the next critical support was right here at the 50 EMA, which was also the breakout level just below 391. We sliced through both of those support levels, and then to make it even worse, the triple Qs also sliced through 387. So we're running out of support levels for the bulls, and we did lose the bull trend. So by far you're seeing a lot more selling in the tech sector, which actually is to be expected in a rate hike environment. The tech sector is usually the first to get hit, along with the other growth stocks in the growth sectors. So watch these next support levels down here at 382 and then 379, and our critical support level, which is also our support trend line, down here at 374. If at any point we lose all of these support levels, you are going to see a full-blown stock market correction in the magnitude of 10 to 15% and possibly even more. We won't objectively know we're getting that correction until we see high volume selling slicing through these support levels, and we are getting very close to those support levels, so we should know in the very near future. Now the bulls on the triple Qs need to be a lot more cautious because we are losing the bull trend and we are below all the moving averages, and this is definitely not a market you just want to blindly buy the dip in if you have no idea why you're buying. So right now on the triple Qs, you need to look for resistance to the upside at 387 and 391, and if at any point the triple Qs start breaking back above 391 and reclaiming that level as support, that will be your first warning sign that we are likely going back into another bull cycle, and this is all just a higher low dip. Keep in mind when you're looking at price action, you do want to pay attention to if you're forming higher highs and higher lows, and for all we know, we just form a higher high and we could be in the process of forming a higher low. We won't know until we see a bounce on the price action off this support level right around 382, or possibly even a double bottom off of 379. You don't want to just guess and assume this is going to happen, so you will want to watch the price action, and you will want to see something where you're bouncing off of support and then continuing to go higher, forming another higher high, which is going to be that price target at the new all-time high at 410. If you don't bounce off of the support level, then you're looking for the potential of a bounce off the next support at 379. And if we lose that support, you're now no longer forming a higher low, and you need to be a lot more cautious because there's only one more line of defense of support down here at 374. And if you lose that, you're getting the full-blown correction. So you're going to need to be objective, and you're going to need to watch the price action each and every day. And if you're not willing to do that, then you should not be trading at all, because you have to put in the work if you're going to remain profitable. You can't just blindly buy and then walk away and hope it makes profits. That strategy only works in very strong trends, and for all we know, we could be losing the trend, so you need to be very, very cautious here. Jumping over to the Dow Jones, you can see intraday we did form a brand new all-time high, but just like the other indices, we did sell off and close near the low of the day, and we did close the gap right around 365.7. So we're back down below the previous all-time high of support at 365, and we did close back below the 5 EMA. However, looking at the Dow Jones, you can see very clearly this is a very strong bull trend, and our critical support levels are not even close to being violated, and they're sitting down here at 361 and right around 359 to 360. If the Dow Jones loses those critical support levels, you're looking for the gap close at 357.5 and the 50 EMA of support, and as long as we stay above that level, it will be a higher low, and we can possibly bounce off of that and go back to that price target in the new all-time high prices. Don't just assume anything, watch the price action and know these critical levels. And we're bullish if we start breaking out back above 365, and you know the price targets are up there at 368 and 372. Remember, we hit the price target at 368, and that could have been the top for all we know. So there's no guarantee we have to get to 372 if we cannot see the price action breaking above the previous all-time high at 368. So respect the fact that we're still in macro level bull trends, because a lot of bears made that mistake and completely ignored that fact last year. And trust me, they did pay the price for it. So if you're ignoring the fact that we're in a macro level bull market in 2022, you're likely going to repeat the same exact mistakes that the bears made in 2021. Wait for the objective price action to prove we are no longer in the bull market. Otherwise, you are just guessing and you will not be a profitable trader. Jumping over to the Russell 2000, you could see that we absolutely saw the small caps getting routed, going down 3.39% and closing below the breakout level right around $218. This shouldn't be too surprising because we did know the Russell 2000 was in a downtrend and we were sitting at critical resistance. Even though we didn't fully close the gap, we were definitely finding resistance right around 226.7. So right now, there's still the possibility this is going to be a higher low. We will bounce off of these levels, go close the gap, and possibly test resistance at 231 before we see any more legs lower or possibly even a bullish breakout. However, like I said earlier, you can't assume anything, so you still need to watch these critical levels. Right now, we see price action slicing through a lot of critical support levels, and the next most logical support level is at 214 or the full gap close at 213. If we can bounce off of those support levels, it's still possible this is a higher low and we could still trend higher, but this is clearly a very bearish looking candle that you need to respect. So watch that next support level down here at 214 and the full gap close at 213. And if at any point we start breaking down below 212, you're looking for the next legs lower at 207 and 205. Upside resistance breakouts will be back above 220 and back above the 50 EMA at 223.5. Jumping over to the ARKK ETF, you can see ARKK absolutely got routed today, going down over 7% and slicing through that support level at $90. So you know that means ARKK is going to the next leg lower at 85, and below 85 we're going to 81. We're getting very close to some very strong support levels, and this is definitely a bear market. So eventually we would see a bottom and we would start to come out of this bear market and see a very strong relief rally. We have no idea at what point we're going to find the bottom, so you need to stay objective and follow these price action trends. And right now the trend is still very bearish and we continue to see price action slicing through support levels, so you need to stay bearish on this ETF. Right now, there's basically nothing that's going to look bullish on the ARKK ETF until we get a price action breakout back above 99, and that is clearly very far away. So focus all of your attention to the downtrend and watch critical support at 85 and 81, and the next breakout above resistance is going to be right around this level at $90. We need to get above 90, then we need to break out back above about 94, and then break out above 99, and then still need to break back above that 50 EMA, which is right around 103. So ARKK is going to absolutely still be a bear raid, and the bears are going to continue to short at resistance until something breaks and scares them away. This is a very strong bear trend, and like I always say, you don't want to try to catch a falling knife because you never know how far it can actually drop. Continue to stay objective on this ETF and continue to short it at resistance if you do want to do so, because other than that, you should not be buying this ETF. It's very weak and it's continuing to go much lower, and on a day an ETF goes down over 7%, you need to be cautious. On the VIX, we were up over 16.6% today, and we definitely see a spike in volatility, and we can definitely see that going into the VIX. Remember, the VIX is more than likely not going to signal a deeper sell-off unless it can close above 20, and currently you can see we are finding resistance at that level. So as soon as the VIX gets above 20, get a lot more cautious, and if the VIX starts breaking out above about 24 to 25, you are very likely going to see a full-blown stock market correction, which means you should be expecting to see a drop of about 10 to 15% in the indices. If the VIX can't break above 20, however, this could be a buy the dip scenario, but we won't know until we see more price action, so watch that critical level at $20. On Bitcoin, we're currently down almost 5%, and we see Bitcoin did break below that support level at 46,000, which means Bitcoin is more than likely coming back down to support at 40,000. If we lose support at 40,000, we could be going all the way back down to 30,000, and we could see Bitcoin going into a bear market. You clearly see we have the full bear trend, and you can clearly see we're slicing through this critical support level, but there's still the possibility this is going to be a false breakdown below support, and we could see some high volume buying off of any of these support levels below around $40,000. So don't get bullish in a full bear trend with price action slicing through support. So you really need to wait until price action can get back above 46,000 and start breaking back above 51,000, and that will be price action back above the 50 EMA and the first early warning sign that we could be going back into a bull cycle. Otherwise, the bears have full control of Bitcoin, and there's no reason to not believe it can't go lower when it's in such a strong bear trend. On NVDA stock, we were down 5.76% today, and we can see that NVIDIA is breaking down below the 50 EMA and breaking below our support trend line. So right now, this is definitely looking a lot weaker, and we still have very critical support that NVIDIA needs to hold above right around 271, because if we break below that level, it will be a lower low, and we will start to develop a bear trend in this stock. So if you see NVIDIA breaking down below 271, it's very likely coming down to the support trend line right around 261 or the support level right around 253. Below 253, it should be a quick trip lower to close the gap at 233, and below 233, we could go all the way back down to close the gap at 210. There is not a lot of support on this stock because it did go up in a straight line. So if you lose that critical support at 253, we could be coming all the way back down to the 230s or around 210. So respect the fact that we're below the 50 EMA and we lost the support trend line. And if we lose this level at 271, you need to be getting a lot more bearish on this stock. To the upside, we have strong resistance at 286, and then we would be looking a lot more bullish if we can get back above about $300. That's a long way to go in such a strong downward momentum move. You won't want to be getting bullish until you can see at least a price action bounce off of 271 and closing back over that 50 EMA. Jumping over to Tesla stock, you can see that we were down 5.35% today, and we did close the gap, so we can go ahead and delete that gap, and we did find support at that gap close. So we're back down to the breakout level right around 1080, and we did close the gap, and we still do have the bull trend. So if the bulls are going to show up, this is going to be the level to do so. So right around 1080 is a strong support for Tesla, and if we can break out back above 1100, we could attempt to break out of that 1208 resistance and try to test the next resistance at 1240. Above 1240, we could see a new all-time high at 1400. But you need to see the price action break out before you know that. Now to the downside, if we lose support at 1080, we're more than likely coming back down to about 1025, and below 1025, you're looking for the very critical support at $1,000. Below 1,000, look for the full gap close at 940, and below that, we could be coming back down to retest support at $900. We still have the bull trend, so we don't want to assume we're just going to slice down through 1,000, so continue to respect those support levels at 1080 and 1025. On Apple stock, we were down 2.66% today, and Apple stock did lose the critical support level at 176, so we do need to respect that. We're one day below critical support, and we still have the bull trend, so the bulls could right the wrong by buying the dip and getting the price action back over that 20 simple moving average. Otherwise, we are more than likely seeing Apple stock coming all the way back down to the 50 EMA in the mid 160s. If we lose the 50 EMA in the mid 160s, we could be seeing a full-blown correction in Apple stock, and that will obviously go hand in hand with a full-blown correction in the indices. So remember, Apple is a market-moving stock, and if it goes through a full-blown correction, we're more than likely going to see the full-blown correction in SPY and the triple Qs as well. So watch that very critical support area right around 176, which we currently are breaking down below. But if the bulls can reclaim that level and hold on to the bull trend, there's still hopes that we could get to that price target at 188. If we lose that level and lose the bull trend, you're looking for support at 170 and 166. On the financial sector, we were down just over 1.1% today, and we did find resistance at the previous high right around $40. We have the gap to fill below, which is still possible to bounce off of that level as support, and we're very close to having the full bull trend, so the financial sector is still looking bullish, and it is potentially a buy the dip sector. In the industrial sector, we were down 0.95% today, and we do see price action still above all the moving averages, and we still have a very strong bull trend, so we could still continue to trend higher from here. The healthcare sector was down 0.71% today and did close below the 20 simple moving average for the second day in a row, so we could be coming back down to the 50 EMA. We're losing the bull trend, and we still have a gap to fill above, so the question is, after we hit the 50 EMA, are we going to bounce and go fill that gap above? On the energy sector, we were flat on the day, basically going absolutely nowhere, and we did close back above the upper Bollinger Band for the second day in a row. We hit the price target, and if we break out, we could continue to run because we do have the full bull trend and we do have bullish price action. So jumping back over the S&P 500, this is definitely time to exercise caution and continue to be patient and wait for price action to tell you if this is going to maintain the bull trend or if we're going to lose the bull trend and see the full-blown stock market correction. If you don't have the patience to watch the price action, you shouldn't be trading at all. So stay objective and remember that you are in a macro level bull market. So don't be getting overly bearish unless we start losing these very critical support levels that I talked about below. If we lose those support levels, prepare for the full-blown correction. And remember that corrections can last quite a long time. So you will need to be patient and not just buy every dip if we lose the bull trend. If you're buying the dip and you know which support levels you're setting your risk at, make sure you know your exit plan if things go against you. Don't just blindly buy unless you're a long-term investor and you have no intentions of selling anytime soon. Also, don't forget on Bank Trade Alerts, we're currently up over 15.3% in the last 3 months, and Bank Trade Alerts is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. With the recent market volatility in a brand new year, now is the best time to become a bank member, and you can find out all of the details about Bank Trade Alerts and how to become a member by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market, and I will be bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.